I think Bitcoin is your best alternative. So I think there's a lot of that happening. What needs to happen for Bitcoin to get to $1 million? I will say the same thing I've said repeatedly. When an investor sitting at home, or a pension fund, or a sovereign wealth fund, or an endowment, or a foundation, if Bitcoin starts to bounce and IGV sits, that means we're starting to see the unwind of the hedges that I believe are put on. And if there are unwinds in the hedges, that's what's happening. The problem is SaaS had its biggest bubble ever and the most VC investments.
According to macro strategist Jordi Visser, you cannot separate Bitcoin from the traditional finance world anymore. Bitcoin isn't behaving like digital gold or a store of value right now. It is being treated exactly like a software group. The hardest part for people to accept is that the massive bubble in SaaS, software as a service, and the bubble in crypto were funded by the same venture capitalists in the same years. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
We're almost at our 1-year anniversary, and none of my views have changed in terms of the bigger picture. So, I hate saying this because I started buying more around as it got close to 100, then under 100. Then I made the statement that once we closed 3 days above 92,000, I want to buy more. I did. And then once it went back below 92,000, I went, all right, let's just be patient because there's something else going on here. The thing that's going on, and I just want to live in the world of facts right now. You cannot separate Bitcoin from the traditional finance world. You just can't.
Okay.
And if you were to ask me what needs to happen for Bitcoin to get to $1 million, I will say the same thing I've said repeatedly. When an investor sitting at home, or a pension fund, or a sovereign wealth fund, or an endowment, or a foundation can invest in the 7 most liquid companies in the world, the biggest companies in the world, and get a similar or better return than Bitcoin, you don't need to invest too much money in Bitcoin. I think the hardest part for people to accept, and I know there's, it's Bitcoin's very polarizing. There is no fundamental narrative that you can go on. Now, when people ask me, I go, yeah, I think the market cap of crypto will eventually be the monetary base of the world, which is about $120 trillion. The assets are 800 trillion. So you could focus on a percentage of the financial assets, but I think those assets are going to delever. So I really did think what had to happen is there had to be no growth. So let's replace speculative and just say growth. Because what I do believe is happening this year is the most important year for crypto ever from a utility basis. Stable coins. Like, nobody's talking about the fact, I don't know if you saw the volumes for January, $10 trillion. Last year they were 33 trillion. The network effects are kicking in, and the reason is because of OpenClaw and Moltbook. AI agents are real and they're happening now, and that's the most critical part for me for the network effects. So stable coins are already happening. With that, you're gonna have more volumes. You're gonna have people focusing again on, hey, how do I make money off that? Oh, I'll go to Ethereum. Right now, everyone's panicked, and I get it. It makes sense to me that everyone would be panicked, but tokenization is coming at the end of the year. The Clarity Act is now over 70%. Like, there are things that people have to focus on that are growth. The problem with SaaS, as people are realizing, is SaaS is directly at odds with artificial intelligence. And I've been writing about it. We've talked about it here. People that love the show seem to be okay with me. The second I started talking about the fact I don't want to be involved in tech, they're like, oh, that's already happened. I wrote a piece on software needing to be re-rated in December. That's what's happening. The problem is SaaS had its biggest bubble ever and the most VC investments the same year the crypto space did. They are combined. They are connected. So I think people are missing the fact that so far this year, the IGV, which is the software ETF, as of yesterday's close, was down 24%. Bitcoin, as of this morning when we walked in here, was down 24%. These are year to date. The overlay of the two is eerie. So I think when you can find something that says Bitcoin is being treated like a software group, but here's the thing about it. There are a lot of hedge funds who also have private arms. They have investments. And you also have endowments. You have other places that have made significant investments in private equity, private credit, VC. Well, all of a sudden, the entire long duration asset market it's been questioned. So what is happening with software? You're starting to read stories about how it's impacting private debt, private equity. Well, there's also hedge funds. And you know what? If hedge funds want to hedge, How do you hedge all of your illiquid private investments in SaaS? Well, if you want to do something liquid that's very correlated, I think Bitcoin is your best alternative. So I think there's a lot of that happening too. And if you're in trouble with an illiquid asset, okay, you're hoping for an exit strategy. Well, if that thing is being marked down and it's being dragged down with the public equities, if you want to hedge that risk to have something offset it for whatever reason, Bitcoin is part of the cap structure of this because it's related. People look for hedges. So when the energy market was falling back in 2015 and 2016, the debt's sitting there, the equity's going down. So people had to find something to hedge, and they were using the equity. So when you're worried about your debt, you go into the equity. It's all cap structure things to kind of protect against losses. But hedge funds in particular, remember, they're sending out monthly statements. They're going to be asked about the questions on their privates for SaaS. And you go through the numbers of SaaS in terms of what percentage of the VC market it was. And the numbers were enormous in 2021. I think it was equal to the prior 3 years in terms of deal size. And for crypto, it was at least that. It may have been the entire time of crypto. So these are linked. They're all linked on the private side. It doesn't excuse the fact that Bitcoin was falling before this. But if you do the overlay in software, software has been weak for a while. And I think this is directly related to AI. The good news coming out of this is I did expect eventually software to come down in the Mag 7 to start to go through a re-rating. I thought Bitcoin would start to diverge at the same time. Instead, what's happened is this fall has been so violent, and it's now getting into there's debt, there's everything. It just reminds me that it falls. The key thing will be for everyone who's watching, if this is what I'm saying, the privates will not bounce. Software to me will not have a significant bounce. And when I say software, for all the people focused on this, I am buying Palantir this week. So it has finally got to levels that for me, I can justify buying it. I was late to the party, but their earnings were spectacular in terms of what they're saying about their commercial and enterprise business, which fits in with my AI theme. You should start to see a divergence between the cyber software, the Palantirs of the world on the analytics and the data storage side, and the enterprise software, the Salesforce.coms, the Adobes. They should not bounce very much. If Bitcoin starts to bounce and IGV sits, that means we're starting to see the unwind of the hedges that I believe are put on. And if there are unwinds in the hedges, that's a good sign to at least change the technical picture for Bitcoin.
You sell the most liquid correlated asset you have, Bitcoin. Visser argues that Bitcoin is being used as a hedge against the carnage in the SaaS market. It's cap structure 101. When you're worried about your debt or your illiquid privates, you move into the liquid equity or crypto to protect against losses. This unwind is what has been dragging Bitcoin down, but there's a silver lining. If Bitcoin starts to bounce while the software ETF sits flat, it means the hedges are finally being removed, marking a massive technical turning point for the crypto space.
I think for certain, for people who want to ask the question why and come up with a narrative as to this is not the Bitcoin that I thought, all that stuff. Well, I wrote about that in the silent IPO piece because I do believe if I got into this to avoid what you're describing, avoid the ETFs, avoid government support, really make it a truly decentralized version of the world, I'd be getting out too, but I'd also be getting out because of concentration in terms of how much my wealth was in it. So I think all of that has happened. The one thing about this that has been, I'd say, I don't want to say interesting, but I would say I think people have to step back and look. Bitcoin's going down at a very similar, I'll say less fall than most of the big software names, except for yesterday's fall of 12%. It had actually been a very orderly, like every day, 2 to 3%. And I hate to say that that's orderly, but the reality is we're not getting 50, 60, 70, 80 vol. You go through what happened, even with the names like Palantir, these names have been bludgeoned. They've been hit hard. They're way off their peak as well. So when you can find, again, software names, the big guys, Microsoft is under attack, and have moves that are very similar. I actually look at this less about the reasons why. I don't spend a lot of time on the reasons why. I don't believe that the stocks in the S&P 500 can survive the onslaught from AI. That is a belief that I have. And so eventually, when you're looking for moats, you're going to realize there won't be any. Now, are there moats right now? Yes, it's the physical hardware world. I can't say it loud enough. This is all part of a rotation that we've talked about on this show. PMIs would eventually go through 50, and we'd see this rotation into the more commodity side. So when energy stocks are up 16% year to date and tech stocks are down 6%, capex is now up to $650 billion. So remember, everyone was like, they're never going to spend this much. Not only are they spending numbers, they are so far above what people forecast. So anyone fading the hardware side, those are real spending numbers that are all for hardware. I mean, it's for semiconductors, it's for power. It's for
$650 billion is going to somewhere.
Yeah.
Where's that money going? Those stocks may do pretty well.
And that's 4 companies. That does not include Anthropic, OpenAI, and XAI. Those 4 companies. The other thing is, they finished and everyone's panicked like Amazon. Its stock's down 10%. Like, okay, their revenues were the weakest of the hyperscalers, up 14%. Nominal GDP in this country is 7%. And I don't think it's going higher than that in the near term. That's really high. And yet these companies are getting a huge multiple on their revenue. So when you look at those 4 companies and people are like, I think this is a problem. These guys aren't going to get the revenues. I'm like, the lowest of the 4 was 14% year over year revenue growth. They're still growing rapidly. And that's with Amazon, which is part, driving around trucks and dropping stuff off. These companies are making a lot of revenues. The problem is for them, they're also spending tons of money. And I do not believe they should be trading at the multiples that they are. Software companies should not be trading at the multiples that they are. Amazon, when it started to destroy retail stocks back in the early 2011-12 period, retail stocks started to fall, very similar to software. And you know what people would argue who wanted to buy them? They would argue that I'm not buying clothes online. Macy's shouldn't be going down. I understand why bookstores would be going down, but I'm never going to buy clothes online. Well, now you fast forward, not only has that happened, they were right to short those stocks. Macy's is still around, but it's not a company anymore. And so what happened was they took the price to free cash flow and they put it down. That's what's happening in the software names. Anyone who wants to argue me that Salesforce.com or Adobe has any chance of competing with AI has not used Claude Code in any meaningful way. You cannot make that argument to me and think about it clearly and not realize they're a growth company. They need to have their multiples come down, and yet they'll be like Macy's. They'll still be around in 10 years. I think people need to get into a room and just go, AI native and old school enterprise company. Are the old school enterprise companies today going to get rid of Salesforce.com? No, but that's because they're old school enterprise companies that still have mainframe from IBM as for a lot of their storage place. They haven't even got off of that. For AI native startups and for people like me, are you kidding me? Like, why would I ever do that? What about cybersecurity? Well, that's why I have a Mac Mini. That's why I have open source on my Mac Mini, and then I've got my laptops. I've got separate things. I've got a sandbox that is completely secure, and then I've got the thing that has all my files on it. I just think when you're AI native, this concept doesn't go. And the reason that's important, I don't believe there will ever be another enterprise. I don't believe that will exist in an AI native world. There will be billions of startup companies that are individual people. They'll be run with AI agents. If you believe in that, how is Salesforce going to make a sale to an AI agent? Like, how's that going to happen if AI agents are making all the transactions? Like, this is actually a world where people haven't even incorporated humanoids into the equation of the way they value companies. Anyone can sit here and make an argument for Salesforce.com. Oh, there's no way software won't exist. You have to prove to me at the multiples that are there in the future that they won't be disrupted. I'm saying the probability of 2 disruptions. One is that the buyers of the future will be AI native and won't care. You're talking about the buyers of the past. I agree the buyers of the past may still be going, but if there's less of them and their budgets are under attack from the people that are using AI agents, it's there. Everyone should go read the Palantir earnings. This is a company that if you ask the same people about Salesforce, will say it's a defense company. Their commercial enterprise revenues are soaring over 100% year over year and over 100% quarter over quarter. So their growth is still going rapidly. And when you read the testimonials from their clients, they're getting rid of their entire software stack. So if you believe that your company, you're investing in companies that will be zombies, The ones that won't be zombies will be using AI and be AI native, and they will be using companies like Palantir. So you're long Palantir, you're short these old school ones. Nobody wants to hear it, but that's the way that my mentality goes on this.
Bitcoin is being dragged through a silent IPO phase, lumping it in with the dying SaaS industry. But once this hedge fund unwind is complete, the divergence will begin. The winners of the next decade won't be the companies that sell seats to humans. They will be the companies that provide the tokens to AI agents. The infrastructure is being built, the hardware is being hoarded, and the old school is being re-rated to 0. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.